Good morning, everybody. Welcome to this panel on the role of supporting organization to encourage inclusive and effective saving. My name is Nicole Guarneni. I'm an independent consultant working in the inclusive finance sector since 20 years, and I will facilitate the panel today. I'm here with three of my colleague panelists that I'm going to introduce to yourself. I cannot see them on the video, but I hope they are there. So we have Ilonka Rule, that is Ilonka Rule Stern, is head of division Asia of the Sparkassen Stiftung International Cooperation. And she has overseen many projects in the Caucasus, the Himalaya, and the Southeast Asia. In past, it was working for the European Bank for Extraction and Development, where she has supported in the setting up of micro and small loan department of banks. Welcome, Ilonka. Then we have Sukhvinder Aurora is an associate. Sukhvinder is an associate of the Oxford Policy Management and director promoter of Aurora Association Limited, the UK. He served as a team leader for the Saving at the Frontier program from 2015 to 2019, and is currently an advisor for the same program. And last but not last, we have Veselina Angelo. Veselina is working for the World Bank and Retail, World Saving and Retail Banking Institute. She has, in this capacity, she's leading the Scale to Save program in partnership with the Mastercard Foundation. And she has managed large-scale financial program for the World Saving Banking Institute. Before that, prior to join the Bank Institute, she worked with Pixel and in the private sector development for GIZ. So welcome to our panelists. This is one of the panel about savings that the conference is proposing, saving the so-called forgotten half of microfinance. I'm not sure we can keep calling it the forgotten half, because we are increasingly seeing as microfinance institutions are recognizing the importance of offering saving service to poor people, and poor people value this saving service. And also, I think the debate about whether or not poor people can save is a bit obsolete, in my opinion. We have seen as poor people as a very huge and latent demand for saving. And when being offered a program and products that are appropriate and effective, they do save. So we are here with our panelists to understand a bit more the role that the institution that they are representing are playing and can play in supporting and encouraging effective and inclusive saving. I don't want to delay more the discussion, so I will give the floor to our panelists to briefly present at the beginning your organization, your program. And we will start with Ilonka. Ilonka, the floor is yours.
Thank you very much, Nicole. And for sure, for the Sparkassen Stiftung or the Savings Banks Foundation for International Cooperation, savings are not the forgotten half and have never been the forgotten half. We have been set up in 1992 as a joint institution of Germany's largest financial group, that is the Sparkassen. And we are the largest in terms of volume and number of clients. Sparkassen have a public mandate which prescribes that they have to balance financial and social aspects. The latter would be in Germany that we must open an account for everybody, that we are supposed to foster savings and financial literacy, also including the prevention of over-indebtedness. We need to foster the development of local SME, of regional SME, and overall we need to foster the regional development where the Sparkasse is. We have some guiding principles which can be prescribed as fair, human, and close. And that translates business-wise simply into good banking, because if you offer suitable products, if you create long-term business relationships, and if you know your customer, that's beneficial for the financial institution and the customer as well. The goal of the Sparkassen Stiftung is to transfer the success factors of these large financial groups, this large successful financial and resilient group, to developing, transforming, and emerging economies. We do receive finance from our members, and we also receive a lot of finance from the German Ministry for Economic Cooperation and Development, doing projects for them. And in short, savings is not the forgotten half, but rather our genetic code. And it's part of our business model and not just an add-on. That's about our organization in short. Thanks.
Thank you.
Thank you, Ilonka. Before giving the floor to Sukhvinder, I wanted to just to mention that in the session, in the panel session, you can find some material and some presentation, and also the email contact of the panelists. I also wanted to remind you that there is a comment chat where you can write your comments or address some question to the panelists, and we will pick up some question at the end. Sukhvinder, the floor is yours.
Thank you. I'm delighted to be part of this panel to discuss this, how we support savings effective and accessible and useful saving services for poor people. But in terms of, no longer the forgotten part of the financial sector, I want to make a 2-minute summary of what happened. I was in late 90s, I was working with Stuart Rutherford and observing what poor people were doing. Not what poor people were saying, but what actually they were doing in South Asia. And while we were working on this, I also, in 1997, attended a global microcredit, note the word, microcredit summit. Yeah. And we were all wondering, at that time, there was a lot of noise about making credit as a fundamental right. And some of us were wondering, how can you make debt as a fundamental right? And then, sure enough, even 8 years later, the UN in 2005, United Nations, called 2005 the year of microcredit. So it's a long history, and it took a long time for a lot of people to discover that actually credit is only one of the many legs on which poor people can stand. It was not just credit. And actually, the funny thing is, when you go and talk to people, and as Stuart said in one of the presentations yesterday, Grameen Bank for a long time was offering only very good quality, but only credit services. But when they offered savings, they realized that actually they could mobilize 1.5 times the portfolio that they were giving as credit, and their dependence on external borrowing substantially came down. But there is another challenge. The challenge is that while poor people really love good quality saving services, the business case for providing small savings to poor customers is elusive. It's not automatic. So while the poor people really want these services to provide risk-free, good quality, sustainable, scalable deposit services to poor people is tough. It's not easy. And that is why the MasterCard Foundation and the Oxford Policy Management developed this partnership in 2015 to work on savings at the frontier. The name is in the title of the program itself, both in terms of savings and also the frontier. The frontier is where the formal sector meet, because a lot of people may have a bank account, a mobile wallet, but actually 80-90% of their transactions are still outside the formal financial sector. And even in sub-Saharan Africa, analysis shows that even when formal financial sector has almost exploded, the financial inclusion has really gone up. people are not letting go informal sector. So all of us need to look at what is it that the informal sector provides, which the formal sector is unable to provide as yet. And so there is quite a lot of work for all of us to do in terms of making our products much more relevant, useful for the lives and livelihoods of poor people. And I think we are still on a long journey. We are not there as yet. It's very early to call to declare victory. So in terms of how we started in November 2015. We went through a 3-stage selection process. Initially, invited concept nodes. Those shortlisted were given $100,000 to work on a project to build a business case, and then 2 to 3 years of implementation process. We work with 9 financial services providers in 3 countries: Ghana, Tanzania, and Zambia, and 6 of these are retail financial services providers and 3 are fintechs. And we are delighted that one of our partners was shortlisted in the 10 financial services providers selected by European Microfinance yesterday, and all the details are there in the publication that has been issued. I'll hand it over back to the moderator and then come back for more details later.
Thank you, Sudvinder. Yes, DSS was one of the semi-finalists, and we appreciate very much the work that they are doing. Maybe we can develop a bit more later. I heard that informal can do something that formal maybe cannot do. I found it very interesting. I hope we will have the occasion later to discuss a bit more about this linkage between formal and informal saving. But now I give the floor to Veselina to present Scale to Save program.
Great. Thank you very much, Nicole. And it is indeed a great pleasure engaging here with the German Savings Banks Foundation and Savings at the Frontiers. So we are the second MasterCard Foundation funded savings-led initiative. But let me first of all say a few words about the World Savings and Retail Banking Institute. It is, in fact, the largest global network of savings and retail banks with more than 1.7 billion accounts that are being offered through the network by roughly 6,000 savings and retail banks globally. And one of the key pillars of WSBI's work is to support the member network in driving financial access and help them develop inclusive solutions for reaching out to the underserved and unbanked. And that since 1924, when WSBI was founded. So referring to the more recent journey of WSBI's programmatic work in encouraging effective and inclusive savings, I want to start in the early 2000s when WSBI conducted extensive research on understanding the barriers to access to finance and how the membership network contributed in overcoming these barriers. That work in 2008 culminated in a 7-year partnership with the Bill and Melinda Gates Foundation when WSBI started working in 10 countries in Africa, Asia, and Latin America to help financial service providers to drive access and to understand the mechanisms that lead to affordable, accessible, and more convenient services for the poor. At the time, there was a strong focus on massive outreach, but there was no guarantee for the accounts being used. So by the end of that program, we understood that we need to do more to look at the quality of savings. So in 2016, WSBI started its second program phase with a new program that was launched called Scale to Save. And Scale to Save started operating in 6 countries in Africa in partnership with the MasterCard Foundation. And the goal of Scale to Save is to drive customer-centric solutions at a variety of financial institutions, so ranging from small microfinance institutions up to bigger 9 million customer retail banks. And that to understand the extent to which there is a business case and whether there is a well-defined institutional model for small balance savings. Also to understand how financially disadvantaged people value, prioritize, and need savings. And here with the focus on women, young people, farmers, but also G2P recipients. And we're also looking at how savings allow customers to increase financial resilience and well-being, which is in fact the overall impact goal of the program. In parallel to that work, and by the end of 2018, the WSBI network had, as part of its commitment to the World Bank's Universal Financial Access Agenda, generated 400 million transaction accounts through the network, and that within 3 years only. These accounts had been mainly generated through the Asian membership in China and India. And we saw that African members, with a few exceptions, fell short in really driving financial inclusion in their markets. And this was one of the reasons why in 2018, the Scale to Save program launched its annual State of the Savings and Retail Banking Sector in Africa report. It's in its 3rd edition now, and the research looks at the quality and the business models for inclusive savings. So insights from this research and other researches that Scale to Save is conducting, and also from intensive business case analytics with the partner banks, the program is translating into project interventions. And to date, Scale to Save has signed up with 12 financial service providers. And I look very much forward to sharing more about how we work with these financial service providers in the discussion to come. Back to you, Nicole.
Thank you very much, Presidina, for the preliminary insight in the work that you are conducting within your program. So now let's move to some questions and debate with you about that. It seemed to me that Ilonka, you presented the Sparkassen Stiftung as a bit different from the other two. They are conducting programs, saving programs, while you mentioned Sparkassen is embedding the saving in all its initiative and activity. Maybe if you can develop a bit more about how Sparkassen embed saving in its initiative and intervention. Some practical example, maybe you can bring.
Yeah. Thank you, Nicole. And indeed, it's because the term program always indicates there's a beginning and an end, and we just think it has to be embedded. There has to be a business model. And I would like to show that model with the example of Renew MFI. Renew MFI has also been a semi-finalist. And Renew stands for Respect, Nurture, and Empower Women. It's an NGO in Bhutan that supports and empowers women that are suffering from domestic violence. And together with the Sparkassen Stiftung, we have created Renew MFI, and we did so we started in 2011. You might know Bhutan is a landlocked country. It has a very difficult infrastructure. It's getting better, but most of the people live in rural areas, and this is like really rural areas, so without access to streets and most often not to electricity. So what we did, and here I would ask the technical host to show the graph. So we started as I said, in 2011, and it was basically trying to implement a Crimean type model. So the steps we undertook were to inform people in one specific region about the potential offer. So what we had in mind was that they would say first, a very small amount, and they would eventually become eligible to receive a loan after 6 months. So that was first information, and then saving, and then loans. And obviously, if people only save and you do not have an income, some organization has to step in to cover the costs. And that has been funded by the generous support of the German Ministry for Economic Cooperation and Development. By now, we have reached a portfolio of savings and of loans of around 200 million Guldrum, which roughly translates into 2.5 million euros, and also translates into some 22,000 clients. So savings are the best source of refinance. We have for Renew MFI also some other sources of refinance, but savings have in most of the time been able to cover the loans extended. And that is also very important for us. We do not want to have a strong growth of savings or strong growth of loans only, but we want to grow them simultaneously. And savings are much more than refinance, because in some regions, our efforts also created a critical mass of clients for the financial institution to work sustainably, i.e. to cover its cost and even to have a profit. And for that, obviously, financial literacy is key. What we also did, we didn't start in the capital. I still remember there small offices there in Thimphu, and we went there also to the World Bank and the IFC, and they had a report about all the regions in Bhutan. And what we did, we have been selecting those regions that have been the poorest ones. So we went where it really hurt. So we went there for two reasons, because we understand that you need to reach the poor to be inclusive. And we also understood we go there where no competitors are. So that was also business-wise, I think, a wise decision. So we went to Samtsi, that's a region in southeast of Bhutan, and we have been happy to create really a critical mass of clients there. We still have only very limited operations in the capital. We work in 10 out of 20 regions in Bhutan. And if not for COVID, we would have increased the number of regions we are working into another region or even Thun, but that was not possible because of COVID. What we do is the center meeting type. So we do that once per month. And this works like follows. So the staff enters the car in the morning. It drives for about 45 minutes with an average speed of, let's say, 15 to 20 kilometers. It then stops somewhere because it has got to walk for another 5 to 10 minutes. And then there is a center meeting, which is not exactly a doorstep collection, because also the people would come to that central point and would also have to undertake some works for 5 to 10 minutes. So this is like, it's a compromise, so that people can come there. But we offer this at least once per month. We pay interest on all our savings, so also on the compulsory savings that meanwhile make only a short amount of all the savings, like it's only 10%. We aim at low dropout rates, so people can come but do not have to save every month. And the hurdles are very low, because our savings start at approximately €1 per month. And this is really affordable for these people. As I said, we aim at balancing loans and savings. So we need to do things effectively. So we have invented quite early on the use of tablets and small printers, because people would like to see what they have saved. Financial literacy is important, because we not in the sense that we just do a one-time session of, let's say, 2 hours, but it's rather during the center meetings that they get these little drops of information and are constantly informed with small lessons. And this is also not to distract the client, but to use the time while he or she is in the center meeting. And we have also larger events. So we recently did a World Savings Day. This is also, by the way, an initiative of the World Savings Banks Institute, that there is a World Savings Day every year. And we have done a very nice video, and in the conference folder, you will find the link to that one. So that is basically what we are trying to do. So it's embedding in the sense that we start with savings with easy products, and that is then a sufficient source of refinance to transfer that into loans, which is a complicated equation. So for the time being, that's me. Thank you.
Great. Thank you very much, Ilonka. It's nice to see the growth path of Renew Microfinance in Bhutan. I was one of the consultants that participated to the award process, and it was my pleasure to read about Renew. What I was impressed of is that Renew is not offering any complicated product with the complicated product design, but is doing really a good work in encouraging saving of rural women in Bhutan. So it was very, very interesting. Let's go on with a question for Sukhvinder. Sukhvinder, maybe if you can give us some example of some specific challenges that financial institutions you are working with are facing, and how with your program you are supporting overcoming these challenges.
Okay, thank you. As I said at the beginning, in the opening remarks, finding a sustainable, scalable business case is the core of what we are trying to do. And during this session today, I will pick up two examples. Let me start with the example of proximity. Here I'm talking about geographical proximity, physical distance between the customer and the provider. This is very different from the cultural proximity, on which we can have another substantial discussion. Many of you would have come across customers who are living physically very close to a bank or a branch, and yet they do not see the bank as something of use to them. And there is no interaction, even though physically they are very close. There is no interaction between the bank and the branch. In terms of geographical proximity, we started identifying lots of challenges that the financial services providers were facing, because, for example, we wanted them to look at their coverage in rural and urban areas. Now, a rural market center may have lots of branches, so it's not really a challenge of proximity in that vicinity. But you go 5 kilometers away, and suddenly, with poor transport links, like you were talking about Bhutan earlier. Bhutan, just across the hill might be 2 hours. So it is very contextual specific. And so therefore we said, okay, what can we do about this in terms of how do we make it practical, doable for the financial services providers. Can we have the slide, please? Yes. So this is an example of Tako Radi in Ghana, where on the left side, I don't know how big your screen is in terms of this thing visual, but as I said, all these resources are available in the session notes later on. Yes, thank you for that. All the session notes will be covering more details on this, so you can look at all the resources that we have generated, which I will be talking about just now. But if you see on the left side, this visual, this is about a rural bank which is not having much competition, and also whereas if you go to the other side, on the right hand side, you see all kinds of banks physically being there. The key point I want to make in this slide is that now technology exists and is being used by our partners to convert very sophisticated satellite imagery into an Excel sheet, which even a loan officer, branch manager can convert very easily, and along with geotagging of their customers and access points, they can add in additional information about population density in that particular geolocation, and so therefore can start integrating this proximity analysis from a theoretical challenge to a practical use. And I will just then explain how we got to this situation. Thank you. We can take off the slide now. Yeah. So we started by talking to our partners, understanding what was going on, what was really the definition of this proximity challenge, and what could be done about it. Based on this, we were lucky to be able to find a technical expert who was able to convert this very sophisticated satellite imagery into practical doable tools, both on a manual basis and also using artificial intelligence of mapping these tools into directly Excel based tools which could be used by financial services providers without investing heavily either in the technology or in the processes, because that was the key for us. Because some of this geo mapping was being done at a national level, buried in Ministry of Finance or central bank or in some of the donors offices, but not really available at the front end. You remember I said we are talking about working at the frontier. So how do you work at the frontier with the frontline staff to make this usable? And so we did some technical analysis. Based on that technical analysis, we brought together all the financial services providers who were interested. They met in Dar es Salaam in September last year, and then they were able to actually go to a neighboring poor location and test out how they could even collect some of this geotagging data. Based on this, we actually held a webinar. We actually held a webinar where we invited even others outside our financial services partners to be able to listen in to the practical examples that these financial services providers were using. Based on this, we have now released a paper. A paper. All these resources are available in the session page, and also in if you do a web search on FinDev or SEEP network, you can find all these resources. And then we have more recently written a blog about it. So the key point is that as of today, the satellite imagery, the population data, the infrastructure data, all that is publicly in public domain. And using technology which the financial services providers already have, the infrastructure that they already have, and with very limited, simple skills, the financial services providers can use this proximity, convert this proximity challenge into a proximity opportunity. And some of the partners are already now integrating it with the back end of their core banking systems. For example, one of them can even see on a real-time basis where physically the agents are traveling, how much savings are being collected, and then start analyzing what is the route, what is the geographical span of a particular agent, how does that differ from the neighboring agent, where there are areas for potential lap and inefficiencies, and how those can be removed. And you can drive efficiency. You can also visually see big gaps between where the agents are collecting. And for example, the agent may be going to 3 streets, and then 5 streets there are no customers. What about these 5 streets? These people also need saving services. So can we not provide them, improve the usage in these areas, etc. So we see the financial services providers have a great opportunity to improve the uptake and usage and increase efficiency, and thereby the sustainability and scalability of their saving services. And as I said, we did a technical paper, there's a webinar, there is a more detailed front-facing, more easily accessible working paper, and a blog available on all these things that I've just mentioned. So I'll just stop there.
Okay. Thank you, Sukhvinder. Ilonka and you tackle already some very interesting point. Ilonka before was mentioning about the importance of non-financial service as well. It's something that we also, Veselina will a bit explore. And Sukhvinder, you mentioned about the importance of digital solutions also and technology in order to overcome some of the issues like getting more close and the proximity issues. I just am taking an eye on the comments session as well, and there was Dirk was asking to Sukhvinder which is the name of this tool that you have shown, the Excel. There is a name for that?
We're calling it proximity tool. I mean, I'm not the one who's leading this work. I mean, there are much smarter people than me who are dealing with it. So if you get in touch with me, our email address is there. I can, we can follow up with them directly. Yeah. And then, as I said, you can look at the public resources,
Okay.
then get in touch with us. All the contact details are on the session page.
Great. And I see that the comment page is not very full of comments, so don't be shy. Address your question and comments, and we will try to take a look at that. Next question to Veselina. Veselina, so we have seen as there is an increasing interest in financial service providing, offering savings service to poor people. But too often we struggle with a lot of inactive and dormant accounts. And so I was wondering, is the financial service provider business model maybe not appropriate or adapted to ensure effective uptake and usability of the savings accounts?
Right. Yes. Okay. So first of all, I fully concur with Ilonka and Sukhvinder that addressing convenience of the services and the proximity gap and pricing of products and channels is very key in improving access. And also for shaping financial service providers' business models. And these are elements that Scale to Save is looking at as well. But I want to speak about another point for business models to fully meet the needs of the market and to be inclusive. I believe organizations need to move more away from thinking products and channels and start thinking what really adds value to customers. So here at Scale to Save, we want to build customer-centric solutions where the customer is in the center of the attention at all levels, at the entire institution and along the entire value chain. So Scale to Save uses change management coaching to support that process. And it is an integral part of the program. And we truly believe that every savings-led initiative should, as a matter of fact, have change management coaching as a key component so that we build strong institutions with strong business models. So what does the coaching do? Our coaches are, in fact, using neuroscience to help financial service providers to tap into a more adaptive mental mode and to address people's openness to change. And the mission that the coaches would agree can be manifold. So it can be to build an inclusive savings mentality within the entire institution. It can also be to support the organization in their digital customer journey, or it can simply be to help them understand how customer-centric they already are. And here the CGAP developed customer centricity self-assessment tool, for example, is of great help. So throughout the process, our coaches engage all stakeholders along the entire value chain. So there are customer service events where we leverage influencers in the markets and leaders in society. There are bank staff members, agents, insurance brokers, farm association members, and the customers themselves participating. So basically, everyone who is important along the value chain of the service. And this is basically to break up silos and allow the organization to operate across functional teams. And what is very important in that process is that we make sure that the FSPs are operationally fully enabled to drive inclusive savings. So, for example, we are developing a toolkit and the playbook so that they can drive change forward once the program is pulling out. It's also important to have people owning that change process and assure continuity should someone be pulling out of the organization at some point. And we also need staff that feels empowered to make decisions, and that is an address to the executive level. We find that institutions with less hierarchical structures are in fact more prone to become customer-centric institutions. And we also think that for business models to work more effectively and inclusively, institutions should become learning organizations, such as Scale to Save is a learning program. And we see a lot of similarities between driving change and driving organizational learning, as a matter of fact. It must be intentional. And it must be driven by owners that really ensure that knowledge and change is effectively captured and shared throughout the entire organization. Also, we believe that there will be no sustained change at organizations if the FSP does not see the benefits of the change agenda. So one of the things that is also important is improving data intelligence so that FSP see the benefits and have better tools to model business cases in the institutions. And so how does it work? We at Scale to Save help FSPs to move towards a more integrated and adaptive business model approach, which means that the business case modeling does not just look at the impact of cost drivers on transactional data, but it would also look at the impact of key strategic decisions, for example, or adjustments made to the project design. And also it would look at shifts in the organizational culture and how these shifts have an impact on customer engagement. So this second part is still something that we're chewing on. I believe that the European Microfinance Platforms Working Group that looks at the quality and reporting of savings will help here in our thinking. And yes, I want to pause here and play the ball back to you, Mikko. Thank you.
Thank you, Selina. Thank you very much. It's often an issue, as you mentioned, of management, of changing the management mindset and culture. It's something very important, I think, and it's not easy to transform, for example, from a credit-driven institution to the deposit-taking institution. And I'm very happy to see that in your project you are offering this change culture agenda and training, because I think it's very important. I don't know if the other panelists also have comments on that. Please go ahead. Otherwise, I will go with my next question. So, Sukhvinder or Ilonka, do you want to comment on that? Did you also?
I fully support Veselina's notion that that is really an issue of culture, and you have the issue both sides, because you have the issue at credit only institutions all of a sudden, mostly not all of a sudden, will go for savings, but you also have it vice versa, because if you have a savings-driven institution, it's also difficult then to implement lending. So, and I have seen both sides, I have to say. So, I mean, today it's more about savings. I have, by the way, always wondered about that term customer-centric, because for me, it goes without saying that you offer products and services that are customer-centric, because otherwise they wouldn't be, nobody would ask for them. So for me, it just goes without saying. But yeah, maybe to the next question.
So next question to you, Ilonka, is let's now discuss a bit about some lesson learned from your program, and which lesson learned can you share, and did you manage to identify some win-win solution? And with win-win, I mean good for the institution, but also for the client.
Yeah, that's exactly it. You have to create win-win situations, because you have to balance social and financial aspects. I mean, that's the old thing we are all talking about. The financial institution has to be sustainable, has to make at least cost coverage, and if not, and even small profits, because you have to adapt to changes. And I mean, change is the only constant in our world. So you have to survive and even more than as a financial institution. And this is exactly the part what we are heading at, because we are coming from financial institutions. So we keep that in mind. And what we see is, for us, savings are refinance. So we have to make them somehow manageable and plannable. We have to collect them effectively, but we also have to be attractive, customer-centric, in order to really be able to collect them. And that is why we do work with easy products. One can say a vanilla type product, so really easy to understand. Financial measures are key. Once again, you need to be inclusive. So we go to a specific region and we try to capture all the small parts of that region in order to really do it effectively and inclusively. So at the same time being effective, which would be beneficial for the financial institution, and on the other hand, being inclusive, which is beneficial for the final target group. For that, you have to understand the target group. I believe that because we are in close contact with them, but we also have like focus group discussions. I mean, I would call that market research. So what do the clients really want? What do they really need? And can we offer something on a cost coverage base that responds to these needs? And quite often you find it. Personally, I think with savings you can do that. I would like to really see it with microinsurance. I think that's one of the most difficult issues we currently face in microfinance, how to really do that and implement that. So it's effectiveness and inclusiveness, and they do not exclude each other, but they rather complement each other. So this is creating that win-win situations. Also, you need to have a certain patience. With many institutions, it's not like when you start with credit. And I think that's a big difference. Many microfinance institutions mostly started with credit being received either as on subsidized terms or as a grant from some donors. And then you disperse the loans, and you can be profitable very quickly. With savings, if you start with savings, you need a little bit more time to do so. At Winwin MFI, it took us 3 years from the opening of the first branch to become cost covering. So therefore you need patience, and of course, therefore you also need funding. And I guess that's one of the huge issues. So this is in a nutshell what
we need passion, funds, and time.
Yeah, and also I would like to reiterate is like the learning process you undergo. Yeah, so together with the institution, and you need, in many programs, once again, you just think, okay, now the donor comes and now you do this and now you do that. And I think, or we believe, it's very important to develop together with a partner. So it's therefore we have also partnership projects where the partner organization not only has a large saying, but is a driving force. So for us, one of the lessons learned of the manifold projects, and we did many, many projects all over the world, is like, you do not necessarily need a strong partner at the outset, but you need a partner that is willing to undergo changes, that is willing to develop, and that is willing to work together, and not just waiting for funds, but rather to really incorporate the ideas to interact.
Exactly.
Yeah,
and be proactive, of course. So I'm taking an eye on the comments. Still very shy people in the audience, so no questions so far. So I will keep going with my question and asking to Sukhvinder. I have heard that one of the role of supporting organization is helping the financial service provider going deeper into data analysis. We know that on the savings side, the data collection in the analysis is still insufficient. So can you explain a bit more how are you doing this, and maybe provide some findings, insight from your experience?
Excellent. Thank you. In terms of providing saving services, I think we should start by accepting that approximately correct is better than precisely wrong. We collect a lot of data, but we need to understand which data we are collecting and from whom and what does it mean. So it's very, very important that we look at it as an iterative process, as a change management process, as Veselina explained. Data can be a very powerful part of the trigger to have a conversation around change, because the change will only happen when the partners themselves see the need for change, not because we tell them. And this could be a big driver for change. So we started by simply, like any programs do, we started collecting data on a quarterly basis. From there we went into quarterly calls, discussing and analyzing that data jointly with the partner, creating dashboards which were more visible and powerful, and building up trends over time in terms of activity, non-activity, saving patterns, seasonality, channel use, which channel was being used, why people were only using cash in, cash out, and not mobile channels or other things. What were the opportunities for reactivation of inactive clients? And then you encourage partners to start going one level lower. Why is branch A performing better than branch B? Why is product A performing better than product B? Why profile of customers which are younger performing differently from those who are elder, or women performing differently from men? So start slicing and dicing the data to begin to understand and find answers together, and then move towards a dashboard, a data analysis which is specific to that particular financial services provider. And often when you talk about data to financial services providers, they think of quantitative data. And when you mention qualitative data, they say, oh, we are not a development organization or a research organization. We are a financial services provider. But actually, there is quite a lot of qualitative data, which we demonstrated in our learning event in Dar es Salaam in November last year, where actually we broke up our learning event into two teams, and 5 teams, but basically looking at customers and staff of 2 financial services providers. And even based on short planning and phone calls with some customers and some staff, they were amazed with how much data you can collect even on a 15-minute phone call. So it's, if there is a will, there is a way. And it need not be very sophisticated. It need not be analysis leading to paralysis, but simple things which can help you understand the context of the customers. Because I think a lot of FSPs spend a lot of money and time on marketing. I think they need to spend equal amount of time on observing and listening. People, savers, borrowers, they're constantly voting with their money and time. We need to just observe what is going on and adapt. And the best marketing is if the customers tell other customers that, oh, this is excellent product, use it. M-Pesa, Uber, WhatsApp. Nobody said, where is the marketing in all this? The customers have done the marketing, not the financial institutions or the providers. So I think we have to go for viral products, products which are so exciting for the customer that the customers themselves become, it's not only users, but champions and ambassadors. So there is quite a lot of qualitative data that we facilitated, apart from quantitative, analysis. And then we also commissioned with Bath Social and Development Research, equipped methodology. This is a qualitative impact assessment protocol where we did a blindfolding research in the 3 countries in the proximity geographical areas where our partners were working. But neither the researchers nor the customers knew what the research was about, in terms of that it was commissioned either by SATF or SATF had X, Y, and Z partners in these countries. So we also got some very useful behavioral feedback from that independent research, and we brought that back to the financial services providers, and then of course we keep discussing with them on the quarterly basis. We are not as far advanced on data as we are on proximity, but we are going in the same direction. Again, starting from what is the problem, how do we strengthen the business case? How do we, as Vasilina said, find the triggers and the champions for change management internally within the organization, build it as a partnership, as an adaptive program, not as a blueprint that we all have a magical solution to this problem. We'll collectively discover the solution rather than thinking we have a solution which will, if it was that simple, it would have been done by now.
Thank you,
and then moving towards, a proxy.
You have 30 seconds, Sukhvinder,
Okay,
because
okay.
I would like to give to Vasilina also the opportunity to share it.
So moving towards a warehouse, data warehouse, and personas, which kind of users and non-users are there. Okay, I'll stop there. Thank you.
Thank you. Thank you. Yes, yeah, I want to give Vasilina also the ability to share some lesson learned from Scale.
Okay, great. Miko, you will just stop me, right? Because I have a couple of points and I see that...
you have 3 minutes. You can see
okay. All right. Well, I wanted to create some analogies between the research of the State of the Savings and Retail Banking Sector report that I mentioned earlier, that WSBI conducted at 24 financial service providers in Africa, and how Scale to Save is addressing some of the issues. So in terms of customer engagement, that is indeed very low, and it is no doubt a sign that formal savings are not yet fully effective and inclusive. And at Scale to Save, we're testing a lot with product bundles to see whether linking savings to insurance or loans that can trigger more engagement. As far as microinsurance is concerned, for example, we're not very sure that this is indeed a driver for active savings. What we're sure about is that we need to deploy a less defensive usage definition. So here in Scale to Save, we work with definition on a monthly basis. So an active, engaged customer is a customer that does at least one transaction a month, and not a year, as so many financial service providers are defining activity. Here we also have to segment behavior, because obviously a farmer behaves differently compared to a market seller with more regular income streams. At the same time, we do not want to over-segment. We've seen that there are a lot of savings products on offer. So does a customer really need to benefit from more than 10 different savings accounts on offer? Or isn't this just rather contributing to confusion? And there is a clear link to, again, looking at the value proposition and how we know what actually adds value. And I believe the financial diaries, for example, that Sukhwinder mentioned at the beginning, and research in general is a huge source of information. What we, however, see is that FSPs really have a challenge with translating research findings into meaningful solutions. And that is perhaps also very much linked to Sukhwinder's comment on suggesting that FSPs should be spending more time in observing than investing into new marketing tools. So programs like Scale to Save or Savings at the Frontiers as well can help here to translate research findings into operational toolkits, for example, which is something that FSPs do more appreciate. I also want to make a comment on pricing. So there's a lot of talk about moving towards more transaction-based and tiered transaction-based pricing. We still see a lot of ledger fees charged, which obviously feeds into low-income people's savings. However, we've come to believe that price might play an inferior role compared to safety, accessibility, and convenience. And speaking of accessibility, there is clearly a common trend that we see with a significant growth in banking agents and digital mobile solutions. And this trend is obviously accelerating with COVID. We at Scale to Save are promoting and testing shared agency infrastructure in Uganda, for example. Because from a customer standpoint, it doesn't matter to whom the outlet belongs as long as the service is convenient. And we do see too often that FSPs want to roll out their own network channels, no matter what it takes. So more trust in the convenience of partnerships is actually needed. We've also seen that there's a high perception at the FSPs that we researched of low value savings being a viable business opportunity. But in many cases, it's more perception rather than a confident statement. So again, we need to move towards more integrated business model approaches that look at quantitative and qualitative aspects. And I will pause here because I'm looking at the time.
Yeah.
So,
thank you, Veselina. Thank you very much. Thank you to the host who have provided us a few minutes more to close, but we arrive at the end of this session. I thank you all the panelists. It was very interesting and great insight and great sharing of the different solution that you are testing. I think there is not a model that is emerging so far as being the best one. Maybe the time will teach us more, but I think it was interesting to see some promising saving strategy that you are applying that can scale savings among poor people. I thank you very much, the audience as well. Not very, very active in engaging with us, but we thank you all. And I think and I hope that you are going to enjoy the end of this first online meeting. It was a great pleasure. Would have been greater to be with you all in a single room, but that's life. We do. Thank you very much to all, and stay in touch.
thank you.
Thank you.
So, thanks a lot, everybody. Thanks.
Thank you.
Take care. Bye.
And so now it's time for some networking. So please go ahead and click away, find people that you want to chat with, and visit exhibitions stands. Right after the networking, there will be 2 parallel sessions, which I will tell you more about right after this next half hour of networking. Enjoy.